Good morning, everybody. It's Hammer. Today is Friday, February 30th, 2024. I know, I'm just kidding. It's March 1st, 2024. Welcome to the Daily Mortgage Rate Update, the only place on the web where you guys get to join me live and be a part of the conversation. Currently on Facebook and on YouTube. I'll have to see about going on TikTok. If y'all got my email, I was trying to do a live with Ariel Best and to discuss rates with her followers. She has bunches and bunches of them, and it wouldn't let me join. And we think it was because I didn't have enough subscribers followers because I don't go on TikTok. But anyway, it's pushing me over there. So remember, you can join me live each and every day, 9:30 a.m. Eastern time. If you're watching on the replay, I love you too. Just go ahead and give me a hashtag replay to love me back. Always appreciate that. Don't forget to smash that like button, tag a fellow friend, share us in a group if you're on the YouTubes. Go ahead and subscribe, give us a thumbs up, all that good stuff. Remember, you can sign up for our written email lock advice to your inbox each and every day, www.ratelockadvice.com. You can also sign up for our text alerts at www.ratetextalerts.com. And a quick heads up, I don't mind if you use any of my stuff to help you in your business. If you share it with agents, if you're posting it on social, I don't care. If it helps you, then that's what I'm about. So unlike a lot of companies that, rightfully so, protect the data and information, I do this to help you guys. It's my goal. So anyway, remember, you can also check us out at originatorssuccess.com. Find out how we help you get loans from Google and social media. And if you want a live reminder that I'm going live each and every morning, how many of you get the text reminder, by the way? I have to look. I haven't looked at that number in quite a while, but I do send out a quick text reminder because I know that the platforms are not always reliable. So I send you a quick text reminder to let you know that we're going live. So that's always certainly worth checking out. Let's go ahead and say hi to the live folks. Who do we got here this morning? If you're here this morning, say good morning. Let me know that you're here. Let's see. We got Mallory Fotiades first to say good morning. Good morning, Mallory. Great to have you here. Kelly Cargill, Mike Tebow. Good morning, sir. Mike, did you guys get all that snow that they were promising up there in the north? I have not followed. We're getting some cold rain down here over in the Smoky Mountains, but I'm not quite sure what you got up there in the north. Tom and Sir, Crystal, Nay, great to see you as well. Let's see who else we got going on. Kenny Rivard. We've got Ron Siegel. Yeah, Ron gets the text. I know you're awesome, Ron. Always appreciate you, man. Mike said, great idea to send out text alerts. Yes, thanks, Mike. A lot of people asked for them, so because the whatevers are unreliable. So anybody that wants, you can use this cool QR code, or you can use the link that pops up, or you can go to hmmr.io/live-reminder. Chris Weber, live from the Nashville area. You know what I love about Nashville, Chris? They got a Tacova store, the boot store. Went to one when I was speaking over in Dallas the other day. I loved it. Donna's over in Knoxville. Good morning, Donna. You're over by my Costco. I'm only about an hour and 45 minutes east of you over in Western North Carolina, over by Maggie Valley, Waynesville area. So good morning, y'all. All right, let's get to the good stuff. Let me go ahead and throw my captions back on here. Let's turn this back off. Okay, so what do we got going on this morning? Rate sheets today likely to be a smidge worse than yesterday. Not much. Bonds starting to slip a little bit. Let me go ahead and show you here. We'll pop this side by side and I'll show you. Bonds are slipping a little bit from the best levels of the day yesterday. Let's bring this whole window up. There you go. Okay. So taking a look here at this fancy little chart that I got going on over here, you could see right around 10 a.m. That's right about here. That was the peak. So the higher this line goes, the better the rate sheets will look. It means mortgage bonds are selling for more money. That means better premium pricing on your rate sheets. Okay. So right now we were up here and it kind of lost its way down a little bit. As this chart moves down, you see this trend. That means that pricing gets a little bit worse. Now, we're not any big moves worse, just a little bit worse this morning. However, it's important to note that we do have a lot of data coming out at 10 a.m. this morning. Reprice risk is still low, right? Because it's not likely that we're going to see things change later in the day, but we are going to get movement around 10 a.m. We're going to get the ISM data, the ISM manufacturing data. It's just economic data. It's not going to be any huge market moving data, but traders are looking at it to see an idea where the Fed is at. We do have lots of Fed speakers today, but they're going to be saying the same thing that everybody else has been saying. Fed officials, the PCE data also allowed Fed officials to stick to a narrative of cautious optimism about rate cuts. Mary Daly yesterday said central bank officials are ready to lower interest rates as needed, but emphasized there's no urgent need right now. And that seems to be the main message that all the different Fed members are putting out there. John Williams reiterated he expects the central bank to cut rates later this year. Meanwhile, Raphael Bostic said recent inflation readings indicate there's going to be some bumps along the way to target, and Austin Goolsbee cautioned against reading too much into a single month's inflation data. Now, what's funny is they really make this data sound like it's bad. It was 0.4 instead of 0.3 month over month, and it still went down year over year. All right, the PCE data, which is the Fed's favorite gauge of inflation, that one does not come from the Bureau of Labor Statistics like the Consumer Price Index or CPI one. It comes from the Commerce Department is who comes out with the PCE. So, but all the Fed members they're all sticking to the same script. Fed Daily says officials ready to cut interest rates when data demands it, but they also say they don't want to wait until the data shows that we're ready because that would be bad. Why is that bad? There's a lag. So there's a lag between the Fed activity and when we really see it start to show up in all the economic data, in the economic activities. And if the Fed waited until things were coming down so low to start cutting rates, well, then that means that they're cutting too late. The idea here, though, is that the Fed is going to need to cut rates because rates are too high, not just mortgage rates, but all rates, little too restrictive in the economy. And you kind of want to find that equilibrium and get back to that normal spot. So as far as outlooks go, I mean, the reality, yesterday's pricing was a little bit better. Let me pop this up and go to I don't know why, but when it's in there, the other version, you can't get to this screen. They don't have that in the short menu for some weird reason. Hey, get over, son of a. Okay, there we go. All right. So looking here, some of the better pricing, I mean, it's just a little bit better yesterday, right? 7.10 is better than 7.15, 0.16, 0.13, but it's still a little bit worse than 7.08. This morning, you'll be at like 7.12, 7.13. We're very much, you've seen everything's in a sideways pattern. The reason you're seeing all these mortgage rates move sideways is because all of the bonds have moved sideways. Look at here. You can see that. See how this goes down? There's a trend. We start up here. 2 weeks later, we're down here, right? Down here, we were down here. We moved up to here. Well, since the big move, this was, of course, right after the CPI data on February 13th. After that, we have been absolutely sideways. We ended that day at 98.52. The next day, we ended at 98.83. This morning, we're at 98.80. Right. So since the February 14th, since Valentine's Day here, we have been basically floating sideways. We go down a little, up a little, down a little, up a little. You see these candlesticks moving, bouncing around. You see your rate sheets kind of bounce around, but we haven't seen any big move one way or the other. And the same thing for that 10-year Treasury yield. This morning, 10-year Treasury yield, 4.27. We've been between 4.25-ish, 4.32. There is this green line that we've seen here, this is the 100-day moving average. This has been a very, very strong technical support level. When it comes to the 10-year Treasury yield, we don't want it to go up. We want prices to go up on mortgage bonds, but we want the 10-year Treasury yield to come down because they're inverse. If prices go up, people are paying more, well, then the yield drops. If people are paying less, then the yield goes up. So that's why we don't want to see that. But we've seen a very, very much sideways pattern here. We're likely to continue to see that. Now, next week, things are going to get more interesting, though, because next week we get into all of the fun stuff. We're going to get all the labor data. We're going to get JOLTS. We're going to get the non-farm payroll, unemployment, wages. That's all going to come in. JOLTS will come in earlier in the week. The other big stuff, of course, comes out on the Friday, the 8th. And then on the 12th, we're going to get the next CPI report. Now, because of that, because we're in a position where things could possibly improve, if we start getting some reports that show that February's worsening with strong labor, strong economic data, higher CPI, even, slightly higher PCE, if that is more of an anomaly, if that's more of a one-off, we know that was very much seasonal adjustments. We are all expecting to see those revisions come in next week on the jobs data that we got for February. So we're going to see if that happens. And as long as the Fed expectations for what happens at the Fed meeting this month remains the same or improves, well, then we're going to see rates kind of hold steady or improve a little bit from here. It's not likely. Again, the outlook very much the case that rates have peaked, at least for now, as markets adjust to the idea that the Fed is not going to start cutting rates until June or July. So the expectation of a Fed rate cut in March, totally off the table. Whereas in December, when we had all of those better rates, there was a 75% probability that the Fed was going to cut as early as March. That is off the table. The idea of a May cut also very, very far off the table. 78%, only about a 20% expectation that it could happen. We could see this improve a little bit next week if we get very soft data, though. Expectations right now that it's going to be June or July. About a 75% expectation we'll see a rate cut by June. All right, so that kind of puts us in there. May, pretty much, not expected. June is the big one. July, there's still some holdouts that we could see rates hold steady into July, but it's unlikely. They need to start cutting. Probably June is when they'll start cutting. But if they start seeing signs of weakening data, it could come as early as May. Not going to see it at this March meeting, right? So, but we've got March 8th is labor data. We got March 12th is CPI data, and then March 20th is going to be the Fed, and more importantly, Fed Chair Jerome Powell's press conference, and that's when we'll get some lift, right? So anyway, that's what we got going on. That's the outlook. That's everything that we've got. Let's take a look at your comments, see what you guys have to say. What are y'all doing this weekend? I am going glamping with the wife. Let me see if I can find this real quick. Airbnb. I'll log in. We are going to a dome. We've done the dome thing before. This one's like a very bougie dome, though. Check this out. This one's pretty cool. And that's one of the cool things about living in the Smoky Mountains. There's lots of these little things, and they're not usually too pricey. Continue with email. I did. All right, here we go. Where's my trips here? Here we go. Trips. All right, so I'm going to show you guys this. This is where we are going. This little dome thing here, and check that out, huh? It's pretty cool, right? We got a little drone shot, little dome in the trees, a little outdoor shower, but hot water. I like to shower. They've got a little kitchenette-ish type thing in here. They've really got this thing bouged out, right? Look at that. Check that out, huh? This is pretty cool looking. It's supposed to rain today, but hopefully it dries out tomorrow. Fun little sink. I mean, like, this is in a dome, right? Denise, you're headed with your Florida to a volleyball tournament. Well, have fun and good luck to her. First and foremost, we want her to stay healthy and not get hurt. Second, go ahead and let's get a win. Let's get a W. I love win. So Denise, you are going there. Ron said we all need to become fans of reading Nick Timros's stuff. Yeah, Nick Timros, for those that you don't know, is a Wall Street Journal. He is a Wall Street journalist and writes for the Wall Street Journal, of course. And he is what we call the Fed Whisperer. Thank you, honey. He gets all the stuff going on there. So as I have a picture of a little toilet up here, that's funny. Right? I'm going camping and they got a little toilet, look at that little spot to eat, little table, little kitchenette. It should be fun, right? I'll have a good time. I always have a great time with my wife, though. So, but that's where we will be this weekend. Let me know what are you guys doing? Let me know in the comments. What is it that y'all are doing? Would love to hear it. And then we're going to wrap it up. I got to get we're going to get the agent power tips out for our Originator Success Elite members. And again, if you are on TikTok, look for me there. I think I'm up to 600 and something people on TikTok. So anyway, I will catch y'all later. Have a fantastic day, my friends, and I'll see you on Monday. All right. Bye.